And welcome to ICB TV. This is episode 107 of the series and episode 8 of Mike's Mondays. I'd just like to thank everybody for all the emails and questions that I got after the last session. I've answered all of them. But as I said previously, anybody got any more questions on any subject matter in relation to AML, just continue to email through. Today we're joined by John Duffy. John's an inspector based in Scotland, and John is going to talk about terrorist financing. Having spent a long and illustrious career investigating terrorism, he's going to cover off the aspects in relation to terrorist financing and money laundering. As per normal, if there's any questions, you can ask them at the end, or you can email them through after the session's finished. So I'll hand over to John. Over to you, John.
Thanks, Steve. I'll just share my screen if I may. Was it not? There we go. So today we're talking about terrorism finance and the red flags. Terrorism activities take place in many different forms, ranging from isolated acts to planned activities of organised groups. The forms of terrorism finance therefore vary accordingly. It comprises not only the financing of the terrorist acts as such, and I'll explain later what these costs can be, but it also supports the financing of the criminal network of the terrorist organisations. And those terrorist organisations require significant funding, both for the actual undertaking of terrorist acts, but also to maintain the functioning of the organisation and to provide for its basic technical necessities, as well as to cover their costs related to spreading the related ideologies. The sources of terrorist funding vary. Firstly, they can originate from illegal activities ranging from low-scale criminality to organised crime, and that could be drug trafficking, trafficking weapons or human beings. And the origin of the funds, however, they might also be legitimate, being provided by members of the organisation, who are usually the newcomers, or obtained through the abuse of non-profit organisations. The funding of terrorist activities often requires funds to be moved within or across jurisdictions, and that can be done through official channels or with the use of cash couriers. Personal experience of stopping someone at an airport and seizing £15,000, which was destined for a terrorist group. A clear similarity can be identified between terrorist financing and money laundering, as in both cases, efforts are made to hide the funds from the scrutiny of state authorities. The techniques to do so are often similar. So we need to detect terrorist financing to identify the networks and suspects after an attack has occurred, but it's also critical in preventing the tragic events from occurring at the outset. Bear in mind that a single indicator may not alone on its own warrant suspicion of terrorist financing or provide a clear indication of such activity. And furthermore, the presence of a single indicator may not necessarily rise to the level of suspicion, but it could prompt further monitoring and examination as appropriate. And similarly, the existence of several indicators in relation to a customer or a particular transaction could also warrant examination. Terrorism finance and terrorism are often, but not always, interlinked. For example, An assessment of the terrorism finance risk will require a consideration of the domestic and foreign terrorist threats. If a jurisdiction has active terrorist organizations operating domestically or regionally, that will likely increase the probability of terrorism finance. Nevertheless, in light of the cross-border nature of terrorism finance, a jurisdiction that faces a low terrorism risk may still face significant terrorism finance risks. Now, there are a number of organizations which are based in countries overseas, and they do not carry out acts of terrorism within the UK, but they actively fundraise within the UK. And for example, there is one where the UK supporters are tasked with raising a minimum of £5 million a year, which is quite a lot of money. Although terrorism risks implies that terrorist individuals and groups are not using funds domestically for terrorist attacks. However, they may still exploit vulnerabilities or raise or store funds or other assets domestically, or to move funds or assets through the jurisdiction. Crucially, the factors associated with terrorist finance risk are also distinct from those associated with money laundering risk. Whilst laundered funds come from the proceeds of illegal activities, funds used to finance terrorism may come from both legitimate and illegitimate sources. Similarly, for money laundering, it is often the case that the generation of funds may be an end in itself, for the purpose of laundering being to transmit the funds to a legitimate enterprise. In the case of terrorism finance, the end is to support the acts of terrorism, terrorist individuals and organisations, and for that reason, the funds or other assets must, for the most part, be ultimately be transferred to persons connected with terrorism. Another important distinction is, whilst identification of money laundering is often led by law enforcement, terrorism finance risk may, by the nature of the threat, need to be more intelligence-led. And although there are some, or maybe some, overlap in the potential vulnerabilities that criminals and terrorists misuse, the motive, therefore the threat and risk indicators differ. Whilst transfer of a low volume of funds may be a low risk for money laundering, this type of activity may pose a higher risk indicator for terrorism finance when considered along with other factors. When you, if you look at the reporting thresholds or limited amounts of funds necessary to carry out terrorist acts, if you look at, go way back to where all this big investigation of terrorism finance started with 9/11. 9/11, the estimated cost was between $400,000 and $500,000. Come along then to the later Madrid bombings, which cost around $10,000. Mohammed Sadiq Khan and 7/7 bombers in London cost them an estimated £500. And the most recent Manchester Arena bombing by Salman Ramadan al-Bidi cost less than £200. And there have been cases where terrorist financiers have been known to use low-limit prepaid credit cards for, or prepaid cards, I should say, for terrorist finances purposes, despite being considered a low risk for money laundering. So when we're looking at the red flags, we're looking at three main general areas where you've got activity inconsistent with the customer's business, the transfer of funds, and any other transactions that appear unusual or suspicious. And we'll go through them. Where you're looking at activity inconsistent with the customer's business, these examples of potentially suspect activity may indicate terrorist financing are primarily based on the guidance provided by the Financial Action Task Force in detecting terrorist financing. If we look at the customers or clients where they're generating funds and they are groups or businesses owned by persons of the same origin or by persons involved of the same origin from higher risk countries, e.g. the countries designated by national authorities in the Financial Action Task Force as non-cooperative countries and territories, and I will cover them later. Where the stated occupation of the client is not commensurate with the type or level of activity, and when you're dealing with currency transactions, if you have clients who are running money service businesses, bureau de change, places like this, you may have access to their Western Union records or other records, and you can see that persons involved in these currency transactions have a commonality in the sharing of an address or phone number, especially when that address is a business location or doesn't seem to correspond to the stated occupation of the person, be they a student, self-employed or unemployed. They can also use non-profit or charitable organisations where you have financial transactions occurring for which there appears to be no logical economic purpose, or in which there appears to be no link between the stated activity of the organisation and other parties in the transaction. A safe deposit box being opened or taken out on behalf of a commercial entity when the business activity does not appear to justify the use of a safe deposit box. And it's no fun to walk into a bank with a search warrant and say, you know, we believe you hold a safety deposit box for this person. And they say, yeah, and you open it and there's £100,000, which was destined for a terrorist organisation. The persons involved in that had absolutely no need, but it was because of a suspicion that was raised by a financial professional that we found it. Where you have funds transferring and you have a large number of incoming or outgoing fund transfers which take place through a business account, and there's no logical business or other economic purpose for the transfers, especially when it's involving the higher risk locations. And again, you may see that funds are being transferred in small amounts in an apparent effort to avoid triggering identification or reporting requirements. And when those fund transfers do not include information on the originator or when the persons on whose behalf the transaction is conducted, or when the inclusion of such information would actually be expected. When you have funds transfers going through multiple personal and business accounts, or the accounts of non-profit organisations or charities are used to collect and funnel funds to a small number of foreign beneficiaries, these are all flags that we should be looking at. And again, foreign exchange transactions are performed on behalf of a customer or third party followed by funds transfers to locations having no apparent business connections with the customer or to the higher risk countries. And then again, transactions involving foreign currency exchanges that are followed within a short time by funds transfers to the higher risk locations, and where multiple accounts are used to collect and funnel funds to a small number of foreign beneficiaries, both persons and businesses, particularly in the higher risk locations, and where a customer obtains a credit instrument or engages in commercial financial transactions involving the movement of funds to or from the higher risk locations when there appears to be no logical reasons, logical business reasons for dealing with those locations. Still on the transfer of funds, when funds are sent or received via international transfers from or to the higher risk locations, and insurance policies, loans or surrender values that are subject to a substantial surrender charge. Cryptocurrencies, they are a money laundering risk, but are they a terrorist finance risk? I would say probably not. There is anecdotal information to criminals using cryptocurrencies to move funds or use them on the dark net to purchase firearms or component parts of firearms. It's been found there's very little use of cryptocurrencies so far in the realm of terrorism finance. Just to give an example, or some examples, let's look at some case studies. Changes in the economic profile of a customer. This one involved a gentleman or an individual who requested the closure of accounts without giving any explanation, and the full content was withdrawn in cash. The source reported that this individual refused to interact with any female employees and seemed to have changed his clothing and physical appearance, which might indicate some adherence to radical notions. Having closed his accounts and withdrawn all the funds, there was a long series of, well, he didn't actually close the accounts, he withdrew all the funds, but then there was a long period of silence which was observed on the account. Other investigations have shown that persons involved in conducting terrorist acts have previously conducted multiple frauds. And sold their possessions, got rid of all their assets, and given the funds away to family prior to their participation in the attacks that they underwent. Another one, and according to sensitive financial information, terrorist financing risks were discovered regarding the use of both electronic funds transfers via banking channels and other transfers via money value transfer systems to areas located near territories where ISIS operates or designated individuals. The location of the receipt of those transfers were often located in areas known to be a funding, logistical, and smuggling hub for foreign terrorist fighters and terrorist organizations. In some of these cases, social media have suggested that beneficiaries of funds transfers may have links to terrorist or radical groups. In other cases, excessive cash deposits were made in one country with subsequent transfers to another to beneficiaries in areas located near where terrorists in areas located near territories where ISIL operates. There was information on, or lack of information on, the purpose of the wire transfers, was the relationship of the receivers or the reason fund transfers were conducted in multiple transactions over a very short period of time. Another one was, and I know there will be questions on this, an illegal money remittance business using Hawala. There was a business operating as a money service bureau. It was also acting as a hawalader and using informal value transfer systems. This gentleman operated two sets of books. One had details of all the legitimate transactions, and one had very limited details. The second set of books were in a form of shorthand and only had nicknames of persons, but they were known to the individual concerned. There was evidence that millions of pounds were going through the business on an annual basis, but the bank accounts did not reflect it. Criminals had also been seen to be entering the premises carrying very large and very heavy holdalls. Subsequently, the trader was arrested for money laundering, and when examining his records, it was found he was sending funds to areas where terrorism was a major concern. Another case concerned a person who was receiving and distributing funds. He claimed it was only helping his community and local diaspora. It transpired that he was raising and sending funds to another country where they were being used. They weren't being used in the UK, but they were being used in the other country to finance terrorism. And some of that money that he was raising was through personal donations of his community, but some of it was also the proceeds of a major VAT fraud, which has been undertaken throughout the sector in which he operated. So we spoke about the high-risk countries, the 5th European Anti-Money Laundering Directive, which came out last year. The current 23 jurisdictions are Afghanistan, America and Samoa, the Bahamas, Botswana, the Democratic People's Republic of Korea, Ethiopia, Ghana, Guam, Iran, Iraq, Libya, Nigeria, Pakistan, Panama, Puerto Rico, Samoa, Saudi Arabia, Sri Lanka, Syria, Trinidad and Tobago, Tunisia, US Virgin Islands, and Yemen. So in summary, you'll have heard this before and you'll hear it again. Be a good keeper for the right reasons. Know your client and their business. Understand your obligations under the money laundering regulations. Establish robust policies and procedures to identify money laundering and especially terrorism finance. Understand the ICB rules and conform. Report suspicion. Remember that suspicion can be reported through the SARS system to the National Crime Agency. There's a specific and separate classification, especially for terrorism. These SARS are given the highest priority and are fast-tracked to law enforcement for immediate investigation. Know your employees. Be confident if you do get asked, you know the answer. So protect yourself, your business, your livelihood, and your reputation. Remember, you are not just a bookkeeper, you are an ICB bookkeeper. That's me at the end. Is there any questions?
Thanks for that, John. There doesn't look to be any questions at the moment. Mike, Stephen, do you want to add anything at all?
Yeah, John. Obviously, we concentrate more on the money laundering side of things when we are doing our AML compliance inspections, when we're looking at ICB's compliance and stuff like that. But terrorism does play a big part. The Terrorism Act 2000 has got some offences in there, and people must be cognizant of these offences when they're going about the business. They've got requirements to report, similar to reporting money laundering. They've got requirement to report instances of terrorism funding and that sort of thing. Is that right?
Yes, absolutely.
So, you know, is it sections 15, 16 and 17 and 18, I think, something?
Yeah,
But it's just making members aware that, you know, as well as the requirements under money laundering, under section 330 of Proceeds of Crime Act, where you've got to report knowledge or suspicion of money laundering, requirements under the Terrorism Act require you to report, you know, instances where you suspect funds may be related to terrorism. You know, and as John said before, this could be from not just criminal means, it could also come from legitimate financial means. If you suspect it's in relation to money, to a terrorist financing, there's a requirement to report these instances to the NCA through the SARS regime, just as it is in relation to money laundering. That's just all I wanted to bring out, John. Anything else from you, Mike?
No, nothing for me. Thanks very much for that, John. As always, if there's any questions after this, if you've got my email address, mike.jardine@bookkeepers.org.uk. If you want to email anything to me, and I'll pass them on to John, or if you got John's email directly to John.
thank you.
Yep. Thanks, guys. Thanks. That was really interesting, I think. So this episode, will, as usual, will be on our YouTube channel today. So look out for that. It's just ICB UK on the YouTube search bar, and you can watch this episode and all the other episodes of ICB TV. All right. Thank you very much, everyone. Enjoy the rest of your day. Bye.
Yes, thank you.